Hello everyone and welcome to Day Trader S&P 500. Today is Friday, February 24th, just after 11 a.m. Eastern. We have a lot to get all of our YouTube subscribers caught up to what our monthly subscribers to our newsletter already have had the last couple days. I think our last report was on the for YouTube video was on the 21st. So let's get you guys caught up. I want to start with the US 10-year treasuries. As you can see, we had 5 waves up from the 2020, that's the year 2020 low of 0.333%. Okay, went all the way up to 4.335. That was a heck of a increase. We've had a correction down. We've had an A down and a B up and a C down. Down here were the targets of C equals A at 2.975% and the 382 retracement of the entire 5-wave rise from the year 2020 is 2.810. And we had an A down, a B up, and a C down. And then we were looking at this, and on the 17th, this move up went above the B wave high, which suggests that wave C and the larger wave 2 may already be complete at this low. Okay, we're going to watch this unfold, and maybe I'll put some marks on here so you guys can see. All right, that is 1, and that would be 2, and here's where 3, I'm just going to move the 4s and 5s out of the way here, would be a 2.618 at 3.999%. Okay, almost got there, but it already passed the 1.618, maybe showing the overall power of this move to the upside. Because if this is a 1 from 0.33% to 4.33%, that's quite a move. And this is 2, and that is the A down in parentheses, the B up in parentheses, and the C down in parentheses. Then wave 3 equals 1 at 7.30%, and that would be the minimum extension. More likely would be a 1.618. We don't have to get into that yet. So we need to see this thing go higher and obviously move above this 4.335 wave 1 high before we have actual confirmation of wave 3 up. Okay, but the third waves are sharp and swift, so we will see. Again, it'll be up against this 3.321% low. A move below there means these lower targets are in play. A move above the wave 1 high brings the wave 3 target of 7.30% into play. So interesting times, but this was the first indication right here, the move above the wave B high on February 17. So that's what's looking at the US 10-year. Let's get into the Qs if we can. Okay, let me close that so we get a little bigger screen. And on the short term here, we had the A wave down from the all-time high, 5 waves, the B wave up in the 816. Everything's going off of that, and we had a target of anyway, it hit right on target as far as price and time. We've got 5 waves down here into the October 13th low. We have an A up at 296.88, a B down, and a C up. And there was the 618 retracement for the Qs, and there's a 786. And there is the make or break at the 816 high, right around 334, I believe it was. Okay, just like in the US 10-year, opposite direction, if we get a move below the A wave high, that suggests that C is already complete right there. And then the larger degree wave 2. We got that, okay, right here, and then we had a back off. So this should be the beginning of 3 up against this high here, okay. And that is, let me get that, at 2 high is 313.68. Let me put that in, 313.68. There we go. That's the parameters for this move down for the 2-wave high. Obviously, a move above there negates the count. We have A up, a B down, and a C up. So that's what's going on in the Qs. I want to get you guys caught up. We'll show you guys what we've put out to our newsletter subscribers. And since our last report was on the 21st, the last video, we'll get you guys caught up 22nd. Again, we put out at least one report a day, sometimes 2 or 3, depending on market condition, okay? Here's where we identified lower lows. You can see from that February 2nd wave 2 high, we keep getting 5 waves down. Before then, we kept getting 3 waves down. So that was the first indication we had a change in trend, and the wave 2 high was in. We had a 1 down and a 2 up. Notice all the 786 retracements here, okay? We've made that point before, but I want to show you guys with the numbers here, okay? This 786 retracement here was 4170. Where is it wrong? If it goes above 4188.25. So if you get on in near this top, nobody gets 100% of the moves. I've done it a few times, but it's very rare. Okay, if you get in on or near this top, your risk is about, what, 18 points to the upside. Okay, that's in comparison to your reward, which, again, you might not get 100% of it, which is over 100 points to the downside. So 100 to 18, that's a pretty good risk to reward ratio. Risk, where is it wrong? Up there. Reward, bang. Or you could get out anywhere here and make way more than you risk. The same here. Again, we had a wave 1 down to 4103 and a wave 1 up to 4070, which was almost, well, it was a 986 retrace, okay? Again, you get on or near 4170. Where is it wrong? 86.50. That's 16 points, okay? And your reward, I mean, choose where you want to take your profits and how much, you know. There's 41.13, there's 40.47, there's 40.09. That's 100, 170 points depending on what your time frame is, what your risk tolerance is, and all that stuff. So unbelievable risk to reward ratios here, and it's set up again today. I'll get into that later. But we have 2 different expanding triangles, one at this degree of trend, which is smaller in red, and one at this degree of trend, which is larger in black, okay? I don't know if we have any more we wanted to show you guys. Any move below the 40.02 low indicates upward retracement is complete, or the third wave down is extending. We have some targets there. Okay, remain in sell rally mode. Okay, that was on the 22nd. Let me give you guys, again, catching you guys up. On the 23rd, we put out to our monthly subscribers. Make sure that's it. Nope, grabbed the wrong one. My apologies. Let's find the 23rd here. There it is. Let's make sure. There it is, 23rd, okay? And we're looking at this fourth wave expanding triangle, which we identified, okay? There's an A up, a B down, a C up, a D down, and an E up. A little throw over of the trend line there, which is typical, okay? And that's what we're looking at there. We had a 1 down, starting wave 5. This is the top of wave 4 at 40.34.25. Wave 1 of 5 is at 39.74, and look at this retrace. We'll get into that later, but that's another, I think, 90% retrace, okay? We had an alternate count in red. We're looking for a thrust downward out of the triangle, which Elliott himself used the term thrust in referring to the move out of the triangle, okay? I'll highlight this here real quick. There we go. The thrust is usually an impulse wave in powerful markets. If there's not a thrust, instead a prolonged fifth wave. Okay, so we're looking for a thrust or a prolonged fifth wave, and that's from the book Elliott Wave Principle by Frost and Prechter. I want to give them credit. That's where I learned Elliott Wave, and couldn't stop reading it back in 1996. I want to make a point on this fourth wave, by the way, too. This is an expanding triangle. I started charting Elliott waves on my wall in 1996, and I thought, this isn't working. I couldn't see 5 waves up or 5 waves down in either direction, and I was like, this doesn't work. And then it completed, and it ended up being a several months long triangle. So the first pattern, Elliott Wave pattern, that I learned was a triangle, not by design, just by default or coincidence. So it's hard to sneak a fourth wave triangle by me, because that's the first pattern I learned, and made a big impression on me, because I was ready to give up, think this doesn't work, but there it was, fourth wave triangle. I was very novice at the time. Okay, I think that's what we want to do on that, and it may get you guys caught up to today before we get into the chart analysis. I put this out this morning. Let me see what we have here. There's that thrust downward that we were expecting. Bang, we got it. Okay, again, there's those parameters up and down for the expanding triangle. There is one down, there is one down at 39.74.25, two up at 40.28.50. There's that 90.4% retracement. Where is this wrong? At 40.34. That's 6 points, less than 6. Okay. Again, you're not going to get in at the very top and get in it. Nobody does. I've done it a couple times in my career. You're happy, but very extremely rare that you get the print. So don't expect it. Okay. You get in around there. But then where's your reward? Well, how about this target here at 39.69? That's over 60 points reward compared to 6 points risk. That's 10 to 1. And that's just the first target. There's lower targets. So it depends on your risk reward and all that stuff with trading, how you trade, what you're looking at. But that's a 10 to 1 risk reward right there. And that's just on the first target. There's lower targets. And this was published at 9:52 a.m. Eastern. It's a little after 11 a.m. Eastern now. Let's see if there's anything else we have here. Should expect a thrust downward out of the triangle. We got it. Okay. Also wanted to make the point, as I got a lot of new subscribers here lately to our newsletter, is that in a bull market, Fridays and Mondays are typically up days, while in a bear market, Fridays and Mondays are usually down. Is it 100%? No, nothing's 100%, but we're in a bear market, been in a bear market for over a year. It's still a bear market, and Fridays and Mondays are usually down. There will be some up days. Here's our downside targets out of the triangle, and I think you have them up here too. There they are right there. Hit the 39.69 to 39.52 hit as I was composing and publishing the report this morning, and there's the lower targets at 39.44 and 39.32. Okay, so that's it for the reports. Let's get into the analysis, and we're going to go straight to the ES hourly. Well, before we do that, big picture, there's A down, there's B up, 816, direct hit on price and time. That's key resistance, make or break for 2. If that breaks, then the blue count, the alternate count in blue takes hold, and that would be an A up, and that should be over here. Okay, let's move that over. That's over there. A up, a B down, and the C target equals A at 44.66. So you always got to ask yourself where you're wrong. Where is this 2 wrong? If the market goes above 43.27, okay? If it does, then that's the near-term target. It's still the high of wave B. It's still a bear market. It's just the B wave, which is a second wave, is higher, and then the third wave will go down from there, or the C wave, I'm sorry. And there's where C equals A from that B wave high on 816 at 43.27. C minimum target is 31.59.75 as long as that 43.27.50 high holds. That's the bigger picture. Let's zoom in from that 2-2 high, that wave 2, which is over here, 42.08.50. There it is. We had a 1 down, a 2 up. Okay, and then we start extending or subdividing the second wave and third wave. Okay, and you can see again there's that 986 retrace over there. Right here is the 786 followed by another 786, and we have a 618 over here. So the risk and reward is just ridiculous. Okay, again, downside targets, pick how much money do you want to make and where do you want to take profit, or you have multiple positions and you take half of them out when it reaches a certain targets. But we give you the targets. We give you the make or break, which subscribers, if you look at our testimonials, are putting their stops above our make or break because that's where is it wrong. Again, in the count, where is it wrong? A move above this 2 is wrong if it goes above this 2 of a higher degree. And it came within, what, less than 2 points. Okay, and again, the bigger picture, 42.08, and even bigger is the B wave high at 43.27. This is what we're looking at here. Again, that expanding triangle of a lower degree of trend in red, higher degree of trend in black, and that was that 904 retrace, 90% retrace. There's targets for 5, 39.16. The larger degree, wave 3 in parentheses, 38.99. We're watching that play out. There's that thrust downward out of the triangle. Okay, let's get into the 10-minute. Here we're looking at that triangle a little bit closer. Again, we've got the A up, the B down, the C up, the D down, and the E slight throw over there at 40.34. There's that 90% retrace at 40.28. Okay, again, the risk is 6 points. The reward down here is 60 at the first target, and there's more. And it hit the second target as I was typing, and we got that move below the lower end of that trend line. So that is a good thing. We'll watch this play out. This is a third of a fifth wave, okay? Third at the smaller degree, 5 at a larger degree of trend. Okay, I think that's about it. I might leave you guys here. It's about 11:17 a.m. as I'm recording this. We'll get this published, and you guys have a great weekend. And until next time, take care, everyone.